Hello, I'm Richard Murphy, and I want to talk about why the UK does not need tax increases now. Look, I am well aware that people are talking about the fact that we have to pay for the coronavirus crisis, and therefore at some time we've got to increase taxes to cover the cost of what has happened in our country over the last year or so. And I've got to tell you something very simply and very straightforwardly, and that is no, we don't have to pay for what has already happened. And that is for one very good and very simple and very straightforward reason, and that is that we have already paid for it. Why do we want to pay twice for something that we've already paid for? How have we paid for it? We've paid for it by the government creating the money to settle the bill. They did that through the process called quantitative easing. They literally borrowed new money, created new money within the government itself, between the Treasury and the Bank of England. And they used that new money to buy back the government's own debt and cancel it. And as a consequence, did not only not increase the national debt, but have kept it under control and have injected the new money that we have needed into the UK economy to keep it going when the level of activity created by the private sector, that's you and me and the companies that might employ us or those that we buy from, has been suppressed because of the coronavirus crisis. The outcome is simply that the government has created the new money to pay the bills. Do we need to repay that money? Well, first of all, how can you repay money without creating new money to pay it? You can't. So it's a tautology to say, in a sense, that we need to repay it, because we can't repay it. So what is that claim about? But could we cancel it? Yes, we could. We could cancel it with new taxes and with new government borrowing, which would suck money out of the productive economy and your pocket. But if we did that, we would, at a time when we are already facing real economic risk, real economic downturn, real risk of increased unemployment as we come out of the support measures for coronavirus crisis, we would be sucking money out of the economy at the same time and therefore reducing demand and potentially creating massive unemployment, a big economic downturn, and if you like, the second wave of an economic crisis to pay for the first wave of the coronavirus crisis, which is just about, I hope, coming to an end, which we don't need to do. So do we need these tax increases? No, of course we don't. The last thing we need right now is a tax increase. In fact, I would say exactly the opposite. I'd say that in very many ways we need tax cuts. For example, we might need to reduce VAT right now to stimulate real growth, to encourage businesses to get back to work, to encourage businesses to employ people, to increase demand, and to reduce the stress on low-income households who pay a very large proportion of their income in VAT, unlike high-income households. And this would be really fair at a time when tax is increasing inequality. I'm glad I mentioned inequality. Inequality is the only reason why we might want to see some tax increases. There's a good argument for increasing corporation tax at present because it's too low. Compared to other countries around Europe, we have a very low corporation tax rate, which makes no sense. Some businesses, those who have done well out of the coronavirus crisis and are still making profits, are really benefiting right now. And they should be paying more corporation tax as a result. The rate could increase to 23% without any penalty at all on those companies. There are others who are doing well, for example savers. Capital gains tax could be equalised with income tax rates and the rate of annual allowance for capital gains tax reduced, and the benefits could be reinvested on behalf of those who really need help in our society right now. For example, those who are on universal credit, where there is a threat that the amount of benefit that they will receive will be reduced from April onwards. So there is an opportunity for redistribution, but for actual tax increases, overall, no, none at all. What we need to do is concentrate on the future that we really require, and that requires the government to spend right now and not crash the economy by trying to pull money back into the government and out of productive use. And that is where we need to go. This is consistent with modern monetary theory. It is consistent with good macroeconomics. It's consistent with good microeconomics. And it's consistent with good common sense right now, when what we need and what we know we need are new jobs, new investments, and the avoidance of further risk at a time when we've been through enough stress already. Increasing taxes is really not what we need. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.